Hi, hello,
Hi,
Alessandro. How are you doing?
hi, James. Nice to have you here.
Thank you for having me.
You're welcome. Yes, great, great.
Let me
I
put
think
my
we will have
camera on.
definitely a great discussion. Hi, Francesco. Oh, James,
Hel-
I see
hel-
your
Hello,
video.
James.
Great.
Hello, Alessandro. Oh, this space we all see each other. It's very good.
Yes, we.
I'm doing this off my phone. I should probably do it off my laptop.
And now in the laptop is not working. At least what we have seen is an option only in the last weeks in X. Already some run some tests. If you join as a speaker, it cannot. It doesn't work. You don't see the mic on, the video on, the option we had last
Yeah,
week. And I think the phone works better. I think it's okay, even if it's not the best camera. But I think it's a great experience also for the listeners in X space to see the host, the co-host, to have the video. So we can go on like this. It's okay.
yeah, it's great. Looking forward to discussing.
Great. So maybe we firstly, okay, let's start maybe officially because there will be a video in YouTube and in Spotify. So welcome to the 18th episode of the podcast Store of Bitcoin, Bitcoin as a store of value. And today we are delighted to have James Van Straten. He's lead analyst at CryptoSlate, and he's also very active in X with many posts on with many graphs, many data. So I really appreciate you and your work. I look at your work always with pleasure and read all your posts. So I'm sure that we'll have a great conversation on Bitcoin.
Thank you for having me, Alessandro. Yeah, great time to speak, especially with what's going on in the markets today. So a lot to discuss. Do you want to lead? Do you have any topics that you want to discuss specifically?
No, I think considering so today is the 8th of July, and we have seen so Bitcoin is at 56, 57 K. We have seen the German government dumping Bitcoin. I think today is around 16K Bitcoin in the market, so they have less than half. And already Mt Gox started the 5th of July to start selling their Bitcoin. Likely, in the rumors are these are the reasons why Bitcoin price went down. We have not seen under 60K since weeks. So it would be nice to know your opinion and your analysis of the current market price.
Yeah, and I was just actually wanted to look when Tesla sold their Bitcoin, and I can't remember the date, and I just wanted to actually find out if that impacted the market at all as well. But that's something that I would need to have a look at. But yeah, I think the markets love a narrative. I think everyone, in times of fear or capitulation, people will run to media and see what the answer is. And I think realistically, being retail, being on Twitter or X, the the major catalyst would have been behind closed doors or something that we won't know. But yeah, look, the German government balance was 48,000 Bitcoin, circa 48,000 Bitcoin last month. They're at a balance now of just under 24,000. Just today, they've sold 12,000 Bitcoin. So that's a USD value of, you have to take the price depreciation into that, but that's say a circa $1 billion. Do I think that has a material effect? I don't think it's enough to warrant it. I think the spot market's around $6 billion. The futures market's around $30+ billion. So maybe a slight material impact, but again, look at the price. It's moved 2%, kind of. I think it went down to 54 and a bit, and then to 58. So we're in a very tight trading range. So I think the market is a lot bigger, a lot more sophisticated, a lot more liquid than we give it credit for. I would have assumed years and years ago that this would have had a material impact on the price, and it doesn't really. So I think this is more of a bullish catalyst than anything. They've pretty much sold half their coins, and it's just a testament to Bitcoin again, showing how it can absorb sell pressure. Again, 6 to 8 months ago, we had obviously just before the ETF launch and the price appreciation of Bitcoin, roughly over a period of few months, 1 million Bitcoin got sold, either via GBTC or from long-term holders who are defined as anyone that's held Bitcoin for longer than 155 days. So the market absorbed 1 million Bitcoin, and we're talking here about 25,000 Bitcoin. So yeah, I don't think this is a narrative that should get too much attention, but I get why, because it's involving a government.
Yes, thanks. I'm following Bitcoin daily since end of the year 2020, and it came already 3 or 4 times this Mt Gox about to sell, and every time the price down because some people go in panic. So I would say finally let's have it repaying the customer, and then we will. It doesn't matter where the price is going, because then we will restart from there. They will be bought from long-term holders. We had also in these weeks both the German government and Mt Gox. Which is your opinion about this Mt Gox repaying the customers?
Yeah, again, when I first bought Bitcoin in 2017, I think the two things that I was first told was obviously about Tether and then Mt Gox. So Mt Gox has been a yearly FUD that's always come into the market. So now it's coming into fruition here. I'm a lot more bearish for Bitcoin Cash than Bitcoin, than due to what's coming online for Mt. Gox. I think Galaxy Digital did a research piece on the Mt. Gox, and I can't remember the figures that they gave, but they just saw limited impact, and I agree. It will be limited impact for so many reasons that you've held for 10 plus years. You may sell a portion, but if you've been in it for that long, you've bought, you've held, I don't see the reason. You're going to cash in some, but I don't see the reason to sell 100% of your stake. Bitcoin is now, what, 25% below its all-time high. I would be waiting until the all-time high again, if not more, to distribute my coins. But I've said previously, Mt. Gox hold around 140, 145,000 Bitcoin in their balance. And where I've said the issue is going to arise is with the short-term holders who have held Bitcoin for less than 155 days, and they've bought pretty much anywhere above where we are now. So we've got 2.6 million Bitcoin at a loss by this cohort, and that's exactly the same amount that was held during the FTX collapse. So I think, again, we're focusing on different narratives and the wrong thing. The 145,000 Bitcoin, I still think, is a very minimal amount, and that puts it into perspective how I think the German government selling 25,000 Bitcoin is even more minimal. So for me, 2.5, 2.6 million Bitcoin held by a cohort that are prone to selling is more of an issue than anything. But yeah, so I don't see any of the German government or Mt. Gox being a long-term headwind. And look, the quicker it's over, the quicker the retail can stop fudding, and we can just move on.
Yes. Francesco, please go ahead.
Yes, to me, the direction also of the market is very clear. We have a lot of bullish signs here. I mean, the reaction of the market, all of this Bitcoin being dumped has been amazing. The price went up. Also, in the last weekend, went up when the traders are offline. That's the most important sign, which tells us we are in a bull market. We are being in this scenario for many months.
I think we are in a bull market. I think we're very similar to the period of August of last summer. We went below some key indicators, one being the short-term holder realized price. So again, that's the realized price of anyone that's held within the last 155 days. We're firmly below that. We were below that in August. we went below the 200-day moving average. We did the same again. So I would expect, or my thesis is, we are below these key moving averages for the next few months, and we will see, like Bitcoin does, like every single time, it will rise from the ashes and break these moving averages. Will it be on a narrative? Who knows? But what I'm also extremely bullish on is the ETF outflows, or the lack of outflows that occurred. So on Friday, we had, I can't remember, $130 million worth of inflows. And that was 2 days worth of boomers, ETF investors sitting on their hands. One was to the July 4th, because that was a bank holiday. And then it had to sit below Bitcoin coming down again on July 5th. So the average realized price for the ETF buyer of 2024 is roughly $58,000. So they've been below it now for a good 4 or 5 days. We'll see again if there are any outflows, or if it's even more bullish, we'll see inflows. So I think that's the kind of behavior I want to see. So yeah, the bull market for me is still alive. I don't take moving averages as gospel. Look, they're great indicators, but it can move in seconds. So like even this morning, everyone was calling for 50 when it hit 54. Everyone was calling 60 when it hits 58. I think we've been in this chop consolidation period, which we have been since March, and you can't go up 18 months without a necessary pullback. It's unheard of. And especially doing this pullback, you can consolidate and then you can go higher again. So yeah, I'm not bearish at all.
Great.
It's a very similar thesis that I give to people that try and understand Bitcoin, that it has to be a minimum 4-year time horizon, not just from the halving cycles, but if you take Bitcoin from any 4-year period in its history, it's up. So that's kind of the barometer you have to hold. The problem is crypto, whatever the industry is, it's 24/7, and the attention span from each generation gets lower and lower and lower, and you have a low time preference until you don't. So yeah, this is the hardest thing, I think, for me, is being in the industry, being in the space, seeing the price, and you get so caught up in it, and you'll see a price move from 54 to 58 or whatever it is, and you'll go, okay, we need to find a narrative for that. What happened? And sometimes it just, nothing actually happens for most of the time. So I think for new people, it's extremely difficult to even understand it. I definitely don't think X is the best place for someone new to understand what's going on. But yeah, the 4-year time horizon is crucial.
Yes, I think the podcast or the video, it's great if someone is interested in Bitcoin, but then they need to learn what is money, what is Bitcoin energy, what is technology. It's not just listening to people, or also in the post, it's too short to explain Bitcoin, but they can get interested and can at least have an opinion of educated people on Bitcoin. I also feel people, maybe they need one cycle. Also for me, I started in 2017, not by coincidence, when the price was going up, as I think 90-95% of Bitcoiners. But then in 2018, I sold as well. Maybe there were other people, there were very few at the time, they were really holders, because in 2017 was a different area.
Yeah.
And now it's me saying, okay, no, we need to hold. We hold from 69 to 17. So from 74 to 54, it's almost nothing. I mean, for sure, we are not happy about this. Also, it would be nicer to have a higher price, but it's not changing our strategy. And there is a very, not at all, like it doesn't matter. The long-term strategy is to buy and hold. But it's very interesting that really the difference between someone who has been 4 or 5 years in Bitcoin and someone who is new. It looks like we need, for many, unfortunately, but they need to have one cycle of in crypto, maybe. And then, yes, yeah, please go on.
No, I don't think it is normal behavior to hold, relatively normal behavior to hold Bitcoin as a buy and hold, and you have to take these drawdowns. We've had 4 drawdowns of over 80% or 75%. Like, that's not normal to hold that. And I get the criticism that how can you hold an asset that draws down like this? But the one that really stuck out to me is when Amazon, when they started, they had multiple drawdowns of 90% plus. So I think the only holders of Amazon stock when they IPO'd to now was Bezos, his wife, and I think Bezos' parents. Everyone else sold. So yeah, to have the conviction to hold through these drawdowns is comes through education. But I think going through at least one cycle, I think you have to not get wrecked, because if you're sitting in spot, you're technically not wrecked, but it's a psychological game more than anything, and it's all about adding to your stack and doing the correct percentages every month or however often you buy, and keeping that long-term horizon. But for the past 4 years, I think, what was 4 years ago, July 2020, so just coming out of the COVID shock, the CAGR, the 4-year CAGR for Bitcoin is 60%. So like, the returns are very good. Do I think they'll continue to be very good? Yes. I think they'll continue to beat inflation and the M2 money supply, which is the only asset that's actually doing it. But if you want those returns, you are going to have to stomach the volatility, which not a lot of people can handle.
I think
the short-term holders that I'm alluding to, I can't remember which day last week it was, but they sold in terms of realized loss, it was the 5th highest amount since the FTX collapse, which is a huge amount. I can't remember the exact value, maybe a couple $100 million. But when I broke down the realized loss by that cohort into how much Bitcoin they hold as a cohort, there was no realized loss from anyone that has held Bitcoin for 6 months or longer, a couple of $100,000. All the realized loss came from the short-term holders, anyone that's held Bitcoin between, as of 24 hours and within 3 months, less than 6 months. So you can see that they've bought into this all-time high narrative that we're going to go to 100K, and it's not materialized, and they're underwater, don't know what's going on, and sell. But again, this happened in 2017, this happened in 2021, and it's happened in 2024. So nothing's changed. The asset stays the same. It's the human greed, fear that continues to play out cycle after cycle. Why? Because human beings are consistent. They're consistent at buying the top and selling the bottom. Twitter or X is a complete echo chamber. Like, we're very unique in terms of we're quite good at just buying every month on an average, but the majority of people will just see these prices and go, I need to get in on the action, and end up getting wrecked. So the big sell-offs are getting smaller from these short-term holders, but they're still huge, and these are what can trigger a market move down, and then you've got the liquidations, and that can do the price cascades really, really quickly, and then selling it into an illiquid market like the German government did on a normal day wouldn't move a price at all. On a day like that, it can send the price down 5%, because it's the liquidation cascades and the lack of trading volume that day, all reasons.
Do you? Yes, thanks for the explanation. Also, it impacts also, if it was while we were having the bull market from 65 to 73, probably the German government selling Bitcoin will not have any impact.
Yeah.
But in days like this, where there's already like panic, at least from people who don't know about Bitcoin, then it generate more cascade.
Yeah,
And
I think that's where the 1 million Bitcoin was sold off right into the bull market. And that was a mixture of retail who hold less than 1 Bitcoin. They were buying in October and throughout and were selling into the March high. So yeah, the market can absorb a hell of a lot of supply when it's going up. And even on the way down, it can do it. And I think this is just showing how deep and liquid the order book is for Bitcoin.
okay. Another question is, are you aware about biggest threat of big selling pressure on top of Mt. Gox and German government? Because we know that we had FTX, we had DCG, Gemini, Genesis, then we have BlockFi, and are all gone. In my knowledge, there are no other big threats. I know that the US government has more Bitcoin than the German governments, but looking also at US politics, I don't think they will be selling Bitcoin. There was also a shift from against crypto to favor crypto. It should be Bitcoin, but we cannot expect everyone understanding the difference between Bitcoin and crypto. So if they say crypto, we take what we got, we take what we get. It's fine for now. So I don't think it would be the the US government will be really a big risk of selling pressure. And I'm not aware about any other exchange or big owner that are planning to dump the market. While we were knowing about, Mt. Gox and German government.
Yeah, the beauty of someone selling is, well, you're not going to know why they've sold, or they're probably needing to sell. Like, we know Germany economically are in an absolute disaster. And by looking at how they're even selling their Bitcoin, there doesn't seem to be any planning. It's just sell and raise capital. I don't know if it's similar to when the UK sold half its gold reserves in 20 market was actually driving the price down of gold. So Gordon Brown, our chancellor at the time, had, I think, half the gold reserves, wanted to sell at X amount of price. The information got out and the market started tanking the price, and we sold it at even bigger loss. So I don't know, maybe there's whales or there's other entities out there that are trying to drive the price lower. So the German government aren't selling for as much profit, or they can short the market because there's so much fear, and then they can buy at a cheaper discount. But the German government has sold, so that means for every seller there's a buyer. Who's the buyer on the other side? The buyer on the other side when the UK sold their gold reserves was China. So who's the other side of the buyer to have absorbed 17,000 Bitcoin today, or the 25,000 Bitcoin that's being sold by the German government? I think those are the questions that we have to ask. But in terms of entities who could sell, look, you've got publicly traded miners who I think are in a lot better shape, and they're going to continue to dominate the market. But they hold X amount of coins. Tesla, like, you never know what Musk can do, so you always have these externalities. And again, with MicroStrategy, holding over 215,000 Bitcoin or whatever they have, and look, we believe that Saylor has a methodical approach, and we trust all his behaviors, but you can't. So there's always going to be sell pressure, and especially on the way down on the next bear market, which is what I'm thinking about, is Bitcoin will be so intertwined with the financial system at that point. And the entities that are going to accumulate it, like the pension funds, and can they hold Bitcoin when it does do these drawdowns, and what will the net on effects be after that? So yeah, who knows? I find it's going to be fascinating, but you never know who's going to have to sell. And if you have to sell your Bitcoin, it means you're not in a very strong position, or you've played the game incorrectly. So it's just a waiting game, essentially.
But in my opinion, someday we'll.
I think the ETF adoption from institutions will take time. It will take quarters. I don't really expect anything Q2, maybe even Q3. I think the Wisconsin State Pension Fund caught everyone off guard. When I had my debate with Jim Bianco, he said he was not surprised by the State Pension Fund of Wisconsin because apparently they are very well capitalized, well funded, and can invest for the future, and they're not essentially quarter or every year panicking of are they going to make the redemptions for their clients. So they have the bandwidth to do it. And he thinks there are 6, 7, 8 other pension funds, state pension funds in America that are similar to Wisconsin that he wouldn't be surprised allocated. So maybe that's the most that we'll get in the next couple of quarters. I'm not overly bullish on anything in the short term. So that's part of the ETF. The other part of the ETF is, like, I'm in the UK, I can't get direct access to the ETF. So I think retail are still waiting, which will unlock capital. From my knowledge, Vanguard, I believe they're getting a new CEO, but again, the clients of Vanguard, they can't access the ETFs. So I think there's still a lot of people that are still shut out, but we're still seeing all these ETFs around the world, Australia, Hong Kong, the UK, Canada, with no traction at all, very little inflows for Bitcoin. And the US ETFs have absolutely stormed it. So I think it shows the appetite for America and not really for the rest of the world. It also shows how early we still are. So that's another sign. So yeah, these are all just things that I think we're so much further ahead than we are. I just think we're still so early. So I'm putting not a bearish hat on, but in terms of that adoption, I don't think we're there, at least for another 2 quarters.
Okay. I have Francesco.
No, if you have on this topic, then I want to go ahead on this topic, and then I want to start a new topic, maybe.
Yes, just another my observation. I think I have a slightly different opinion on these. Maybe not Q3, but I think in Q4 we may see good price appreciation thanks to the ETF. Firstly, it's because of demand and supply. So in the exchange, there are exchanges that are like let's say 2 million Bitcoin, 2.3 million Bitcoin. That is around 140, maybe 120, 150 billion. And if we combine the 9 or 10 ETF, the 10 ETFs that we have, they have asset under management of 17 trillion. So already 1%, it would be higher than all the Bitcoin in exchanges. So this is also the supply is not that much. And on second, yes, I agree that they need to study Bitcoin. They need to time also. They also say 100 trading days or 90 trading days before they start to offer. And they need to, because they need to study as well, because till some months ago, a financial advisor could risk his job in recommending Bitcoin. Like 2 years ago, it was not at all Bitcoin is the evil, and now they have to start to allocate, to recommend. But on the other side, thanks to the ETF, that was a big shift. We are not discussing anymore buying the Bitcoin spot. Then they will have taken also tax, legal, accounting, compliance. Now the asset itself is super regulated. It's like S&P 500 ETF. How to be treated? So what you then have to study is the performance of the asset, and I don't think it may take more than 1, 2, or 3 quarters. So if it is not, maybe likely not Q3, because we have seen now the price going down, but maybe Q4 or latest Q1 2025. I'm not seeing them taking 2 or 3 years in order to allocate 2% in Bitcoin. At the end, we are not asking. This is not that after 6 months of study or 4 months of study, they will decide to allocate 20% in Bitcoin. So it could be that we see already in Q4, Q1 next year a big shift. And it's also, no one wants to be in the first row, but as well, no one wants to be in the last row. If the price really goes up, then it can create an inflection point. So
yeah,
that will be.
And this has been my So yeah, I just think we're in this kind of the issue is we know the answer and we're like, why aren't they doing it? And that's just not how these institutions move. They have to go so slowly. But you're right. If you move too slowly, you miss out on it. And if you move too quickly, like if Dell came in or whoever came in at 60,000 and now they're underwater by 6-7%, it's an ego thing. They look like idiots, relatively. So it's all about timing the market.
We will see in the
pension fund bought the ETF, I believe, on the second or third last day of the deadline. So I think the deadline may be like mid-August. So if I'm looking for anything, it's going to be at least in August. And going into those final days, I think that's maybe when speculation will start to increase.
I want to how they can behave, and I like other people. I'm a long haul investor into Bitcoin. I like, but I do like to look at the metrics because you can better plan some liquidity swaps and then to transfer into Bitcoin, so to sell some asset. And then to this regard, I would like to ask you what metrics do you advise for the average older buyer of Bitcoin to look at? You mentioned many times the MVT, network of value to transaction. I can tell you my favorite, like the monthly RSI, very easily, or the MVR the score, which has been consistently right over time. Of course, we don't have to tell to the people to sell the top or to time the market because that's wrong. But in a site in outlook of planning the purchases and adjusting their DCA can be beneficial for them. What metrics do you like the most, and which are both effective and easy to understand, in your opinion?
Yeah, I think different metrics for different times. Like the MVRV is great to understand, which is the market value to realized value ratio, to understand, yes, the cycle bottoms and the cycle tops if you are trading it as a metric. But just really simple metrics just to understand. So like just the spot volume, what's going on, the futures volume, just to understand how much liquidity is going on into the market. Transaction fees, I think they're always fascinating because that kind of allows us to understand if we're in this bear market, bull market territory. Obviously, the fees are skewed by ordinals and runes and BRC20 tokens because they occur in waves. But that's also a good barometer to see who's actually using the network. Anything with the derivative side of it, so the perpetual funding rate, open interest, that shows how much speculation is in the market as opposed to actually going off and doing the spot. So yeah, I think the fundamentals, hash rate now, especially coming out of the halving. So the hash rate is around 500 terahashes a second, and seems to be holding steady after that significant adjustment. So I think the real fundamentals at this moment in time, I think, are so crucial to understand if Bitcoin is in this bear to bull market, which I think everyone is asking themselves personally.
Yeah, that was very clear. You can say that very easily to the audience. They can buy Bitcoin on the long-term perspective. The amount they can want to allocate, they should be ready to ride it to zero, ideally. And after that, they can look at these metrics we have mentioned before, and try to adjust and to plan their purchase for the future. But by buying holding, they will do much better than trying to find the market.
I think because the market now is so sophisticated, we have other avenues of Bitcoin. So like the miners and their share price appreciation since the halving, which shows that there is still keen interest from institutions, and that the miners now aren't actually tethered to the price of Bitcoin. Actually, they are correlated to the S&P 500 or the US stock market more than Bitcoin. And you see that divergence with MicroStrategy that is flat, because that is obviously tethered to Bitcoin. So you have all these other indicators now, and not just the price. You also have obviously the futures. So these are all, I think, fundamental things that you have to be looking at now, because it's not just the price of Bitcoin anymore. It's everything else. It's why is Bitcoin decorrelated to the stock market when for years everyone goes, oh, Bitcoin's just a risk-on asset. It's just another derivative of triple Q. But it clearly isn't if it's completely decorrelated. So all these kind of questions and nuances you have to try and understand and find, and then kind of put it into some mental model of where you think Bitcoin is and where it's going to go.
Yeah, it's, I also agree with you. It's all a game of understanding how to tame the risks and to offset it with your strategy. It's a strategy game. So you have to allocate to can afford to lose, to study. Then you have to think in a bear market that there is always another halving, and in the bull market that it can drop, but it's still wiser to hold than to trade the market. If you do that over a longer time, yeah.
Anyone that tells you the price is doing this or that in any short-term time frame is just disingenuous or a liar. And no one knows, and the TA can do their best job, but no one has a clue. It is absolutely impossible no one would have predicted Bitcoin to move even today 54, 58, 56. Good luck trading that. I have no interest in doing that. So you've just got to understand where we are. I think we're in the fifth epoch now, and okay, it's now actually the worst return for a cycle at this point after a halving. So it's telling me that we're still on track, because the previous cycles after the halving also weren't great, other than Epoch 2. But all the other epochs really, really struggled after the halving. So that's telling me, okay, it's following suit with previous cycles. And they had this lull for the next 3 months or so. And then they start to kick on. And again, is that narrative driven? Is it baked into the cycle methodology? Who knows? But that's what it tends to do. And I still firmly believe, if I'm saying that we're early and the institutions are not really here yet, or X, Y, and Z, I still then will take the other side that then, yes, we're still in these 4-year cycle periods. The ETF has not changed the 4-year cycle period at all. We just got a bit more demand a couple of months earlier. So yeah, I still believe we're firmly in the 4-year cycle, meaning I still think we'll get this price appreciation Q4. And there's other ways to see it. That if you look at the price from the cycle low, which was the FTX collapse, and we were at 15,500, and now at 56 and change, we're at 250% higher. It just so happens that the previous 2 cycles at this exact point from the cycle low was exactly the same, roughly 250% higher. So again, that's telling me that we're on course for these previous 2 cycles. And like you guys have said, we have huge potential tailwinds, not necessarily now, but maybe in the next 6, 12, 18 months, with AI or with Trump or with the ETFs or with more companies onboarding Bitcoin as a treasury asset. That could be the narrative to drive us higher. But again, we are so firmly on these other cycles that it's quite. It's not scary, but it's like, yeah, it's we're right on track.
Thanks for the analysis. Really also great point of data you shared that very useful for sure for the audience. Discussing also on the tailwinds that we have for the future. Do you foresee also one of the tailwinds also less narrative skeptical on Bitcoin once Bitcoin reaches a certain level? For example, 100K or maybe 150 or 170. 170, for example, Bitcoin will be the second biggest asset of the world after gold. It will have taken over Nvidia, Apple, Saudi Aramco, Amazon, and all the other companies. At this level, I will see very hard to keep a very hard be skepticism against Bitcoin. There was always skepticism, but also the skepticism softened during the years. And do you see there will be do you think there will be a price after reached this level? The skepticism will be much lower.
No, I just think there will always be skepticism. I think I've got $10,000. Everyone would buy it and get into it. I think you just have to add another zero, maybe 100,000. But would I be surprised if people just shrugged it off? No. And then I think we kind of get into this. Yeah, we get this price appreciation, but then you've also got to account for the price appreciation on everything else, with the inflation on everything else. So yeah, gold is sitting at $16 trillion or whatever it's at, but that will go to 20, 25 trillion. So will these other top US stock companies. So I think it will all be relative at points, but I think psychologically, yeah, taking out six figures and not just taking it out and coming back, but actually using it as support, you'd think the whole world would be like, what is going on? But again, I still wouldn't be surprised if everyone's asleep at the wheel. But the one thing that I think does terrify central banks and governments is gold trading at $2,500 an ounce, going to even say $5,000 an ounce. Retail will have no idea. They will not even blink or realize that it's just doubled in price or it's just been repriced. But I think if Bitcoin went to $100,000, I think that would be on the front pages of the newspaper. Not maybe gold doubling will go to the front pages, but I don't think that really resonates with retail. Maybe more central banks and institutions. But what people need is the retail to be like, what is going on in the world? That Bitcoin is $100,000 an asset, and I think that may be the inflection point. I think it's once normal people are like, what is going on in the world, and why is this thing at such a ludicrous value? That could be the tipping point. But either side I've thought about, and it could go either way.
Yes, firstly, I agree on 100K could be a trigger, and not only maybe touching, going to 101 and then going to 98, 97. It's really breaking strongly 100K to never to return under 100K. Okay, we can maybe say many skeptics for the ego, or because they were against Bitcoin, it's hard for them to admit they've been wrong. They will be keeping being or against or slightly against Bitcoin. But I'm very confident, a lot of confidence after we reach 100K, all of these people who are Bitcoin neutral, so they hear about Bitcoin, but they're not interested. And they are in investment. So maybe likely they are or millennials or older. They have investment, they have a portfolio. If Bitcoin reaches 100K, they cannot ignore it anymore. I will say they cannot just dismiss, yes, I don't know that much. It will be an asset of more than $2 trillion.
Yeah,
So,
I think the tailwinds are just what is going to happen in the modern world. Like the deficits are at trillion dollar worth. The debt is never being repaid. It will be inflated away. The currency will continue to be debased. Those are certainties. So obviously you get that asset price appreciation regardless. But it's kind of in the short term what's kind of going to happen. I think that's what everyone's kind of waiting for. So we were getting these unemployment ticks that continue to get put higher. You can clearly see that the macro environment is slowing down. The jobs growth is, in my opinion, nonsense. It's just government jobs, and people say, "Oh, it's still a job." I just don't think that's like apples for apples. And you can clearly see going out, I think restaurants are nowhere near as busy anymore. You can see within the housing market, houses are pretty much frozen, especially in the UK because we're on short-term or like variable rates. Everyone's either refixing at 5% on properties they can't afford or can't actually get on the property ladder because the houses are 50% overvalued. So I think everyone's kind of, I don't know, like being in our echo chamber, we're all kind of have that uncertainty. But again, I think the normal world is oblivious to all of it. But yes, you're right. Long term, we will get that huge price appreciation. But these Fed hiking cycles or these central bank hiking cycles, the last 13 of them, 11 of them have resulted into recessions. But the deficits now are so huge and the inflation is so rife, regardless of what CPI says. They're going to have to stimulate the economy. But my issue is stimulating an economy will not bring back jobs. We've got the biggest wealth inequality gap. Like these aren't going to be fixed through stimulus. We've seen the damage stimulus does. So yes, I agree we're going to get to that benchmark of price, but the intermediate time zone is like what's going to happen. And I think that's the $1 million question. So yeah, you can't trade it. Could Bitcoin go down on a 50% correction? Sure. I think COVID was the test bed for any kind of huge correction on one day, and especially if the stock market turns meaningfully, I think that will put downwards pressure on Bitcoin. So those are the kind of headwinds that I'm looking at. But we all know that Bitcoin is liquidity driven and not recession driven per se, like housing. So as long as the liquidity comes into the system, Bitcoin will continue to appreciate.
Thanks.
I've always held the belief they will cut until something breaks. I don't think they have a time zone. You can see when the talking heads come out and say inflation's not coming back to 2% until the end of next year, or we need to cut rates, or whatever they say. They have no clue. We are looking at the exact same data they are. So that's why I don't really understand that people like monitor the Fed and their exact comments. Like they have no understanding. We know that interest rates take 12 to 18 months to kick through into an economy. And I believe the underlying economy, you've got the underlying economy and then you've got the stock market and all these assets that are just purely liquidity driven. And then you've got everything underneath for normal people, and the normal people are completely wrecked. Like they're not keeping up with the inflation or the interest rates or anything like that. And I think it's like a two-tier system economy. So I personally, look, they could cut in September, but I wouldn't be surprised if they don't. I wouldn't be surprised if they haven't cut until the election and hand Trump this pile of mess. But yeah, I would assume within the next 6 months we do get rate cuts. But the key metric in all of it is unemployment. I think it's now a 3 or 4 year high unemployment in the US. I think it gets to 5% and inflation is still above 2%. They're going to have to favour unemployment and then start to cut rates. So I don't even think inflation is the main metric anymore. I think that will continue to disinflate as the economy slows. I think they just need to try and maybe cut before the unemployment starts. But if you look at the trajectory of the unemployment and compare it to previous cycles, I think it's on a trajectory now that you can't stop it. I think the damage has already been done, and you wait the 18 months for the interest rate hikes, and you get to the end of the year, and then you'll see what happens.
Okay, and you think also inflation? If inflation is not anymore the key driver or the key KPI, can it be that they will adjust the target? We will not have any more, the central banks will not have any more the targets of reaching 2% because it's not possible anymore, and they will increase the target. I see this as a concrete opportunity or possibility, not maybe in the next 6 months, but in the next 3-5 years, because they cannot, the US CPI, even if it's not the real inflation, but even if what they measure, it cannot remain 2% for the next 3-5 years.
Sure, why not? They locked everyone in their houses and done such barbaric stuff over the years and the decades and the lies and the manipulations. Like, sure, why not add another percentage to a metric that makes no sense?
Yes.
To pull metrics from the CPI basket because they don't want to have it anymore. The problem is everyone in this modern world has different baskets of goods and services. If you work from home or you go to work every day, your CPI basket is different depending on the food you eat. And how we can gauge from a basket that they've chosen at certain percentages is then apparently okay for all of us to have is just pure and utter nonsense. And it's also how a group of people can just sit there and dictate the price of money. Look, I'd love interest rates to go as high as possible, but they will always favour the economy. But we know fundamentally the debt levels are too high. I think Japan are just the screaming answer to where everything's heading. Central banks just absorb all the debt. They will debase the currency like no other. And they've already shown that the demographics are truly woeful, declining birth rate, aging population. Their housing market's a ghost town. And different generations have different ideas. The boomers were pre-internet, real estate was the apex asset. Millennials or Gen Z, we want mobility. We don't want to start hoarding houses. We just want that flexibility. So I think in 20 years' time, they're just going to be stuck with a load of houses with just more houses than people. And I think Japan is the answer. They're about 10, 15, 20 years ahead of everyone else. And they have an inflation problem, but have a debt level of over 300% and can't raise rates meaningfully. So look, the ECB were in negative interest rates for 10, 15 years. So would I be surprised if they manipulated and said the CPI targets 3%? No. Or you look at Turkey and Argentina, Venezuela, G20 countries just hyperinflating. So I think, again, we're in an echo chamber of strong currencies and countries relatively to everyone else. But there's no shortcut or no getting out of it. We are past the point of inflection, and the answer is everywhere.
Yes, this point, I think for us it's important to observe the correlation of Bitcoin towards the stock market, the other assets. I also saw some scary charts about the real estate, which is at the same level 2006, Southern America. I just saw a chart which is before the crash. But we have to adjust those charts to the bigger amount of liquidity, I believe. So maybe it will burst, but it will take another couple of years. That's my idea. But talking about the correlation of BTC versus stock market, that's increasing. There were some research. Also, we have witnessed that on the time of the ETF launch, that the correlation widened by a lot, and then got back at the same level. But the signals are very important, because what we want to see with Bitcoin is that when the inflation is too high, when the market heights are not sustainable anymore, everything crashes. Bitcoin should crash less. Ideally, one day should not crash at all. How do you see this coming? Do you see this gradual path going on, and this the correlation getting wider and wider, or do you see because we are talking about the global liquidity here, global market of Bitcoin. So we have a global liquidity versus global market of Bitcoin. Or do you see some sudden, painful event happening, maybe not in the West, or maybe in the West, or maybe in Japan, or maybe somewhere else, which can trigger a collective awakening and can speed up this process and maybe make it the same day?
Yeah, 100%. So Bitcoin is negative on a correlation basis with the SPX. This is the 5th time that's happened since 2019, and every time we've gone into a negative correlation, which is pretty much marked a bottom. That was in the bear markets of 2019, beginning of middle of 2021 during the China mining ban. The FTX collapse, October 2023, just before the run, and then now. So we will get that correlation back with the stock market. Either we're going higher or the stock market's going lower. I'm going to assume Bitcoin's going to start chasing the stock market higher. Again, liquidity driven, the election's coming up. But on the bust, look, for my scenario for Bitcoin to win in that bust situation is it has a smaller drawdown than the stock market. Bitcoin's already done 2-3 20% corrections this year. So I think the healthier we can get to as many corrections as possible, and fill in all that supply within the 50s or 40s, I think will be healthier for when we do go higher. And then I think we do get this inevitable bust. I think different assets will behave completely differently. Liquidity driven is stock market and Bitcoin, but then I don't think real estate can be saved. I think that is purely correlated to, i.e. interest rates or the unemployment. Like we saw kind of Bitcoin and the stock market went to all-time highs, but the market was closed. Well, not closed, but it was just stimulus. And housing was only at that point went to all-time highs because they kept everyone in a job. I don't think they can keep everyone in a job or afford to keep everyone in a job. So yeah, I think different assets will behave very differently, but I don't see Bitcoin going anywhere near the previous cycle lows at all. In a deflationary world, I see Bitcoin actually doing the best.
Yeah, if I have to say, I see the bull market for the next 2 years, and then after that a big crash because the liquidity is too much and it's not sustainable anymore. I've seen those charts in real estate. As you say, it's happening everywhere in the UK. Also here, either in Switzerland, Europe, in the US, everywhere. Nobody. Commercial real estate is dead. Has been dead for 2 years. So I can see increased returns for Bitcoin because if you can look at the RSI now, it's in a territory of 40, 45, which never happened before at this stage of the RSI. So it can really, when it gets to 90, 95, we can see prices which are not in line with the diminishing return theory. That's something to look at. But also in the on the drawdowns, as you said, we can see it to be very, very much resilient because of this increase in the correlation, because of the ETF holders. To be in the true bull market, you need a mixed participants. The real one will come with the retail will merge with the institutional ETF, so it's going to be also the top retail driven as always. But the resilience of Bitcoin will stand out because of the accumulated the correlation over time. And 2 years in the Bitcoin market is a lot. It's not a short period.
Yeah. I think the number one metric for me I love looking at is the hash rate. I think that's such a key metric to understand global energy use for Bitcoin. Like the drawdown, I expected 20% plus. I don't even think we got that from peak to trough. And you've seen all, like with Marathon and their new initiatives they've done with all these new countries, Finland, Kenya. I think we know that China and Russia are mining, Iran, globally. So this is part of that game theory. So for me, hash rate is such a great metric to watch to see how strong it is, and that's really, for me, how strong the network is as well.
Thank you for.
I think the best way to do it is to compare it to other store of value assets, but just by default, there's no carry cost with Bitcoin. The geographical no liabilities, all the pros of holding Bitcoin, and then the apex asset in terms of store of value would either say the bond market, but not really, because obviously inflation is killing it, but the real estate market. And I think the boomers, everyone is pretty much in that generation has owned a property or at some point become a landlord. But you speak to the younger generation who just want to get on that property ladder or emulate to be on the property ladder. And I think just as time goes on, it just becomes so obvious how poor of a store of value that asset is. The depreciation of the materials, the geographical liability, the constant mortgage payments or the interest payments, or I can't tell how many taxes you have to pay in the UK if you own a house. So I just think as time goes on and it just becomes so obvious to why you shouldn't be in these assets and you go to Bitcoin. So yeah, I think as time goes on and the economy only gets weaker, it becomes even more obvious.
Thank you, Francesco. You have another question?
Assets to the CPI inflation, they should all tend to beat it. And then you have to, what people don't realize is they think the CPI is the inflation. It's actually obviously the M2, it's the monetary debasement that's going on. And if you put any asset against the M2's money supply, none of them have created higher highs. Only Bitcoin, I believe, maybe a few tech stocks or a few singular stocks have beaten the M2 money supply cycle after cycle. But that's really the benchmark. I think the S&P 500 goes up 11, 12, 13% a year. That's pretty much the rate of inflation. And it will just continue to follow it. That's why hedge funds say that's the benchmark, have to beat it. And Bitcoin is the hurdle rate. All right, how bad has Bitcoin been? It's up 30, 35% this year. Still terrific. And I think a CAGR of 60, 70% a year. So I still think we'll be on that CAGR range by the end of the year.
Yes, on the other end, you have taking the lowering of the drawdowns. So you have higher lows, but more importantly, the width of the drawdowns in the last 5, 6, 7 years has been smaller and smaller.
Yeah, and it's like even today where
or Bitcoin that you have to take into account as well.
Yeah, and just on the drawdowns, it's the market maturity or the volatility decreases. So look, the German government sold 17, 20,000 Bitcoin. And how much did the Bitcoin price move really? 3, 4, 5%, like we discussed. That's a maturing market. How deep the order books and the liquidity is it's just so unbelievable. And because we're so ingrained by the short-term price action, we don't really appreciate how deep this market is, both to the buy side and the sell side. I think that's going to be a constant moving forward.
Yeah, it was enough. Go ahead.
Yes, no, I think Francesco, you raised a good point on this. For people who understand Bitcoin, it's much less risky now. I also think for sure we cannot have the gains we had in 2017 or in 2013 or before, but at that point, allocating a significant amount in Bitcoin would have been much more risky. Now that we are in 2024 and also we have the ETF, we see the politics of US or even the Democrats are not anymore against. That's why also they decided to approve the Ethereum ETF, thinking wrongly that still Bitcoin is together with crypto, but still a sign that many misconceptions maybe have already been debunked. There will be some remaining, but also the risk of Bitcoin going to zero is less and less. That's why I'm also saying 2024, the ratio risk reward has never been so favorable as this year. Do you see the same, James?
Yeah. God knows, 10 years ago, it's what, 2014, and it was just unheard of. 2017 was really the first I bought the exact top in December, and that was when really retail came in. And if you think about all the challenges Bitcoin's faced, even since the block size wars, and then you go into the period between 2017 and 2019, which was just a long, elongated bear market, COVID, the China mining ban, which was probably played down a lot, but I still think that is one of the biggest obstacles that Bitcoin's face. So yeah, then people go, the last thing, Bitcoin hasn't gone through a global recession. What would it do? But it doesn't make a difference to the actual fundamental asset. So yeah, I think it's pretty much done all the hard work, and it has a 99.98% uptime. I think if you say to people, tell me how the internet works, or tell me how this works, or tell me how that works, no one could tell you. But it's the same thing with Bitcoin. Tell me how it works. I don't know. I just know it works and I use it. And I think that's exactly the same thing.
Okay, thanks. Yeah, good comparison. Francesco, you have other questions, or otherwise we could go towards the end of the space?
No, it's. I wanted just to disagree on the last cycle, this current one, because I'm still confident that the previous one was dampened by the macro condition, the China ban, and many things didn't express its full potential. I could agree in general with the diminished returns in general, but not for this cycle because the previous one was not complete, in my opinion. So we can see returns comparable to the 2017 one. Having said that, I hope I'm right, but not any question. Thank you, James, to have been here with us. We taught a lot to our audience, and it was amazing. See you maybe in another year.
Thank you, James. It was great. But before we finish, I want to give you like the chance to give the closing remarks. Before, I want to say thank you a lot for being in our space. I think it was also a great conversation, and also I think focus on price is the main adoption, the main topic as adoption for new joiners. So it's important to see how the analysts or people who are from 5-7 years in Bitcoin, they analyze the market, and also the comparison with all the other assets. I'm always happy to follow your posts, your matrix, and so on. And we will go through the next months or years on Bitcoin bull market, like all together as Bitcoiners. That said, do you have any closing remarks for our audience?
No, just it's always important to accumulate as much Bitcoin, but staying solvent is the most important thing as well. They go hand in hand with one another. So, and always have a positive outlook in life, and don't get too bogged down about the price action. It's usually a liar.
Okay, many thanks. I think very wise words. Also, one of the rules on Bitcoin Austrian economics is earn more than what you spend, and the rest saving Bitcoin, but you should earn more than what you spend. Thanks all. Thank you, the audience, and see you next week. We have the episode on Wednesday with Joe Cardasare. It will be then 19th. For the rest, have a nice evening and have a nice day.
Thank you, Alessandro.
See you in the next one. Bye, James. Let's keep in touch.
Bye,
guys.
Francesco.